Good afternoon, everyone. It is so good to have you all here today to talk a little bit more about increasing your cash flow. This is a really important topic for us, not just now, but I think in a lot of points in our life. So I'm really glad you joined us to learn a little bit more about this today. My name is Sarah Scruggs. I am the Community Engagement Specialist here at Harvard University Employees Credit Union. About halfway through our presentation, Migdalia Gomez will take over for me, our Community Engagement Manager. We are so glad to be here today and to be able to help you learn a little bit more about this subject. For today's webinar, we've gone ahead and muted everybody on the call today except for myself and Migdalia. This way you all can hear us and continue snacking if you need to, wrangling children in the background if that is necessary. That is totally okay. We don't want this to mean that you won't be at all involved in the presentation. Whichever way you've logged in today, you may have a questions button on either the right-hand side of your screen or at the top of your screen. And you'll see either questions or chat. And this is a place where you can write in questions to myself and Migdalia, and we'll be able to see them and respond to you live or via the chat feature. If you could go ahead and let me know, number one, you know where this is, and number two, that you can hear me by submitting into the questions feature, where are you joining us from today? If you could go ahead and do that while I talk about the rest of the things on this slide, that would be wonderful. We are going ahead and recording this presentation so that if you do miss anything at all, you can come back and watch it later. We will have it on our YouTube channel as well as in an email to you tomorrow so that way you have it in a handy place where you can get to it a little bit easier. We also are going to ask you to take a post-workshop survey for us. It's a very quick survey, just giving us some more information about how we continue to make these presentations a success. So it looks like in the questions feature, I see some people have gone ahead and answered me. Thank you so much. People are joining us from Boston, Somerville, Everett. Great, wonderful. Thank you so much for letting me know. Harvard University Employees Credit Union is Harvard's exclusive not-for-profit financial institution. We serve the Harvard community, including all of its affiliates, and of course, those at DFCI. We are so glad to have you all as a part of those eligible for membership at the credit union. We have all the products and services that a bank offers, but we believe we do it just a little bit better. If you have questions about anything the credit union can offer you, maybe it's a product, maybe it's something you're wondering about with one of our services, we would be happy to answer those questions today as well. So don't hesitate to ask us, but this is just a little more info about who we are. So diving into our topic today, really thinking about what are some ways to increase cash flow. There's really it boils down to three essential different categories or topics. The first being reducing your expenses, spending less money. That's a great way to increase your cash flow by spending less money and going ahead and not spending as much money. Then we have deferring expenses. So this is the type of category where we're not going to be paying it right now to increase our cash flow at this moment, but in the future, you will have to pay that back. So deferring expenses means that we're just taking an expense that would normally happen now and pushing it towards the future. And then we have increasing your income. This is one way to increase your cash flow, of course, because you would increase that top line number of your income. I'm going to speak about the first two to get us started, and then Migdalia will come and speak a little bit more about the last. So learning a little bit more about reducing your expenses here with us, and really we're going to put together reducing and deferring together to learn a little bit more about them. But before we really start thinking about, okay, what expenses can I reduce, we really have to start with a budget. We have to know what we are spending to be able to actually reduce it. And so I know this is not a fun thing to do, but looking through your credit card statements, your check statements, your account statements, so you can see what am I spending in a regular month? Maybe what am I spending in a regular week even? We could go as far as that. But really having a good grasp on what am I actually spending so that way you can see, okay, maybe some of these expenses aren't as necessary as I thought they would be in the first place. So creating a budget is essential. If you already have a budget, wonderful. Have you been tracking your expenses to make sure that your budget is correct and working with the way that you're living life at this point in time? Make sure that you're going back to your budget often to really understand, okay, is this still working for me? Am I spending money where I want to be spending money? If you've never set up a budget before, we do have a budget worksheet on our website, huecu.org/hub. And I believe Migdalia will put that in the chat in just a moment, so you can go directly there. But this budgeting worksheet lays out all of the expenses you have, and maybe you, possibly if you're already a member with the credit union, you've used the budgeting widget on our online banking service. And if you're not a member of the credit union, most financial institutions do have access to a free budgeting widget on their online banking. You may not see it initially because a lot of places will have differences in between their online banking versus their mobile banking. So if you exclusively use mobile banking, I know I do myself, you will not see that budgeting widget at first because it does need to be set up in online banking. And then once it's set up, you can then use it in your mobile app. Using a budgeting tool online is something that some folks like to use, but not everybody. And if a way of budgeting doesn't work for you, that is okay. Maybe you just want an Excel spreadsheet. This is what you're making. These are your expenses. Here's the end number. That is totally fine. And maybe you like something a little more involved. I know for myself, I use the Mint app on my phone, and that connects to all of my bank accounts, my credit cards, my loans. I mean, everything is in that app so that I can see exactly what's going in and what's coming in and what's going out. And like I said, before we can even think about reducing expenses, we have to know what we're spending our money on. And so using a budgeting widget like this on online banking may be helpful because it shows you everything you're spending money on line by line instead of you having to figure that out by yourself. So I highly recommend getting a budget together, looking at your expenses, and really being intentional about those expenses. So now that we have our budget set up, we've looked at our expenses. Can we defer or minimize any of these expenses? The first thing that I'm going to go over is actually the minimize expenses side of this on the right-hand side. You see the first one being refinancing. Migdalia is going to speak most about refinancing today, so I won't touch a lot on this topic, but that is a really great way to minimize your expenses if you do hold multiple loans. And then strategizing your spending. This is what I want to spend the bulk of our time on this slide speaking about. When we talk about strategizing our spending, we really want you to hear from us that you are putting your money exactly where you want it to go. Do I always want a large chunk of my paycheck to go towards my rent? No, but I do want for a large chunk of my paycheck to be serving myself and my family in a way that keeps a roof over our heads and keeps us safe. And so for me, that is a good expense to have. And I like that we have a place of our own and don't have to share it with roommates. So that's an expense that I've strategized. I've said, you know what, this is something that's important to me, so I'm going to put money towards it. And that's really what we want you to think about when you're thinking about your spending and going over those expenses. Are you wanting to put your money towards those things? Then that is a good expense. That is a good expense to have. And sometimes we see that, you know, I really don't even like, delivery services. My food's always cold when I get it. I don't even really like any of the delivery services that I use. And so maybe that those expenses could be going more towards, saving up for a vacation in the future or a morning cup of coffee from my favorite coffee shop instead of going towards the delivery fees on something that maybe I don't even like. My food's always cold. They always get the order wrong. So really strategizing your spending and not saying, you know what can I totally take out of my budget because even though I want it, I shouldn't be spending money on it, but actually thinking about, okay, where do I want my money to go towards? What would be best for my life? And what would bring joy and happiness to my life? Those are things we need to take into account when we're thinking about our spending. And then researching ways to reduce spending. It's important if you are planning on making a large purchase. I always recommend looking to see if there are any coupons. But here's the catch. We I never recommend people just go looking for coupons because a lot of times if we go looking for coupons, we find one that's like, oh, 20% off. But if it's 20% off of something that you weren't going to buy in the first place, then you're really not saving any money. But if it's 20% off of something you were already going to buy, that's a great deal, and I highly recommend doing that. So researching ways to reducing your spending is important. Um, let's say that you need a new TV for your house, but you really want to wait till there's a good sale. And we all know the best time for TV deals is either Black Friday or um, during the Super Bowl. So you put it on your list for those times. That's a great way to research ways to reduce spending because you know you need this product, but you know what? I can wait until it goes on the sale that I want. That's a really great way to think about it. And then talking a little bit more about deferring expenses. Are there any expenses right now that you can defer? Maybe not pay right now, but put off to the future? Right now, all federal student loans are at 0% interest and the automatic payments have stopped. You are not required to pay on your federal student loans until the end of September. I believe October 1st is actually the first day that you'll be paying on your student loans. And so if you need an increase of cash flow now, make sure that you're not automatically paying your federal student loans because you don't have to be at this point in time. Again, you do need to put into your budget for starting in October to begin paying on those again. But right now, it could really help you with maybe building up an emergency fund that you've haven't had or something of that nature. Skip a pay when the coronavirus first hit, a lot of banks and other financial institutions started offering more skip a pay options. This is where you may have a loan or a credit card with a company and you apply to skip 1 month of payment with them and they just add that payment on to the end of your loan. So let's say you have a 12-month loan and you need to skip a pay for May. So you apply to skip a pay. So in May, you're not going to pay anything. So that increases your cash flow for this month. And then they will stick it on the end. So now your loan, you'll be paying on this loan for 13 months instead, but one of those months you won't have paid. So it will be a little bit longer that you'll be paying for it, but you will not be paying for it right now. For utilities, if you are really in a bind at this point in time, and you really do need an increase in cash flow, reach out to the utility companies here in Massachusetts because a lot of them, Eversource, will work with you on a possible monthly payment plan so that you're not, having those crazy bills in the summer or in the winter, and you're able to find a payment plan that works well for your budget. During coronavirus in Massachusetts, your gas, electricity, and water cannot be shut off by utility companies for lack of payment. This is not me encouraging you to not pay your utilities, but this is me encouraging you to speak with someone at those utility companies if you are having a problem paying and seeing what are your options moving forward. So now I've spoken a lot about possible ways to save a little bit, reduce your spending. In the questions feature, which again should either be on the right-hand side of your screen or the top navigation, it may say questions or chat. In that space, if you could write in, what is a way that you save money? How do you save money? If you could write into the questions feature and let us know, what is one way that you save money? All right, someone said using cash. That is a good way to save money because if you have cash on hand, that's how much money you have. But if you have a credit card, you can overspend from time to time. You said using cash. That's a great one. Okay, it looks like we got another one here. Okay, they have a browser extension, so when they are online shopping for something that they need, they use a browser extension called Honey to see if there are any coupons on the web. All right, someone said direct deposit into a savings account. That's great. Making sure you're automatically saving up because if it's not in our hands in the first place, it makes it a lot easier to save it rather than putting everything into a checking account and then splitting it up ourselves. So great job. That's an automatic saver right there. That's great. Awesome. Looks like we have a couple more. Someone said that they buy generic things in the store because they don't see much of a difference in between generic and name brand. Definitely. I am definitely a girl who's known a lot of different names for cereal in my time. That's for sure. Those are definitely my favorite to buy generic. They all taste the same to me. If there's enough sugar in it, it tastes the same. And last one looks like someone said that they make sure to put alerts on their phone for anytime they spend over a certain amount. Great. That's a great idea. Thank you so much. And if you have other ideas, you can continue placing them in the questions feature, either again on the right-hand side of your screen or the top navigation. We'd be happy to hear and share more of those. So here's some that we had thought of, and a few of them you thought of too. Setting up balance or spending alerts, like we said, making sure that every time you swipe your card, maybe if you're like me, I have a notification that goes off every time my card is swiped. Number one, it helps to make sure that there's no fraud happening on my account. I know when somebody's buying something on my credit card. But number two, I also know like, oof, I just spent that much money on something that I really didn't want to spend money on. It makes me rethink again my strategy for spending. Using separate accounts, making sure that when you're saving for something specific, putting it into a separate account and saying, you know what, I'm going to name this account. This is my wedding account. I am saving this money specifically for my wedding. Because then when something comes up and maybe we want to spend money, we rethink spending $20 on a new, for my husband, it would be new recording equipment for his music. He rethinks that because he would rather save it up for the wedding instead. Automating savings, we got a wonderful suggestion in the chat about this. Going ahead and automating that savings so you can just set it on autopilot and you don't have to remember to do it each month. Adjusting your budget frequently is so important when you're thinking about making sure that you're doing something that's right for you and your family. If you get it perfect the first time and you're like, yes, I know exactly how much money I spend on everything, that's wonderful. But a lot of us will fluctuate from month to month. We don't know, for me, I know I spend a little bit more in specific months because we have more birthdays in my family in that month than other months. So we spend a little bit more that month than most months. So adjusting our budget frequently to make sure that we're on the right track will help us. Using cash, like someone mentioned in the chat, finding discounts. Somebody also mentioned this in the chat. Using those browser extensions for things that we need. Again, that's the key word, things that we are already going to be spending our money on, and reviewing our spending. Those are all extremely important when we think about how we can continue to reduce our expenses in a way that's sustainable moving forward. Maybe you've never set up a budget before, or you have questions about how a budget would fit best with your family. Our partners over at Greenpath Financial Wellness offer free credit, budget, and COVID-19 counseling. The credit union pays for this service so that anyone in our community can call in for free and have this available to them. So if you've never set up a budget before, or maybe this is kind of a new concept to you and you'd like to talk with someone about it, they offer one-on-one counseling for you. And you can find more information on our website, huecu.org/greenpath. But they're a wonderful partner of ours, and they offer phone counseling and they offer it late into the night till 10 p.m. So if you have odd hours at the hospital, hopefully they'll catch you at a good time. I'm going to pass it over to Migdalia Gomez, who's going to speak a little bit more about refinancing debt. So Migdalia, I'll hand it over to you.
Thank you, Sarah, and thank you so much, everyone, for joining us again as we talk about increasing our cash flow this afternoon. A couple of things that I know Sarah had already mentioned, and I know we had some folks that joined a little bit later, so I just want to recap. There are really three sort of ways to increase our cash flow. We can reduce expenses, we can defer expenses, and we could work on increasing our income. Sarah did a great job focusing on reducing expenses and deferring, and I'm going to talk a little bit more about reducing expenses and possibly even deferring them when it comes to the process of refinancing. Well, before we get started, we want to make sure what exactly is refinancing. We understand that we all have different personal finance backgrounds, and we just want to make sure we're all on the same page. As a result, excuse me. So what is refinancing? So refinancing essentially is when you take the debt that you have with one company and you bring it over to a different company. Typically, you'll go from loan A and bring it over to company B, which would take on that additional debt. But before I continue, I just want to make sure that you folks can hear me. It appears that Sarah, who was our primary host, was kicked off. So if folks would let me know on the chat if you are unable to see the presentation or if you are unable to hear. So if folks wouldn't mind letting me know. Okay, wonderful. So I see that folks are still able to see and hear. Thank you, and apologies for that delay on my end. Just want to make sure you're still able to hear and see. So what exactly is refinancing? Refinancing is when you take the debt from one company and you bring it over to company B. Well, why exactly would company B want to do that? Company B now has your business. So let's say that I have $10,000 with company A at 10%. Alone. I could take that 10,000 at 10%, go to company B, and company B would offer me a lower interest rate, possibly let's say 5 or 7%, maybe 3, depends on the interest and the market, and I'll get into that shortly. As a result, now company B has my debt, which means that I have now paid off company A. Why would I want to do this? Well, because that interest rate is lower, I have now increased my cash flow because I have more money. I have a lower monthly payment typically. There are other times that maybe the interest rate isn't substantially different, but you may still want to do a refinance to extend the terms of the loan. This is very common when it comes to student loans. I've also seen it with auto refinancing as well, auto loan refinancing. So maybe I have a 3-year loan, but I need to increase my cash flow. So I may extend it to 4 or 5 years. In doing so, just be mindful that if you extend the loan terms, depending on the interest rate, there may be times that you may end up paying a little bit more. However, most lenders will give you the opportunity to be able to pay off the loan earlier without any prepayment penalties. And that is an important factor when you're looking at your different loans. You want to see if they have any prepayment penalties. And again, most don't. So I think it's easier just to see things and put some numbers. So on the next slide, we're going to see the actual benefits of refinancing. Sarah, if you don't mind going on to the next slide, please. Okay, so I think we may have a little bit of issue with Sarah. So I'm just gonna, if you don't mind, give me one moment and I'm gonna share my screen so that you can see.
Hey, Migdalia, we are having a little bit of issue with my screen, so I think that's great if you can go ahead and give it your screen if possible. Sorry about that, everyone.
Okay, apologies for that, everyone. So we're gonna now talk a little bit about the actual benefits of refinancing and how that applies to the numbers. So I'd like to just see the numbers. It just makes it a little bit easier for us to break it down. So let's go back to an example. Let's say that we have a $10,000 loan and we're making payments of $200 and it's a 60-month or a 5-year loan. And that's very common when you're thinking about refinancing. They're very frequently going to have it in months, just like babies. It's you don't usually do it in years. So we're having that 7% interest rate. Our monthly payment is 200. The total interest paid is going to be a very important piece because that's what's going to help us calculate any potential savings that we may have. So in this case, the total cost of the loan or that total interest paid is 1,858. Well, if I'm able to refinance at 5%, meaning that I would be able to bring down my interest rate by about 2 percentage points, which may not seem like a lot, you're only saving about $11 a month. But again, it's all about doing as many of these as possible so that we can slowly increase our cash flow. So I rather have an extra $11 than not. But the other piece that I want to point out is you're going to save in the total interest paid. So there, right there, you have about $500 savings, which is going to be $500 that can be applied towards any additional debt or anything else, any a site of savings goal that you may have. However, if you're in a situation that you're comfortable paying that $200 a month, you're like, you know what, I'm not really going to miss that $11. That refinance is still going to save you money. Here, you're going to see that it's going to save you about $600. And it's also going to save you 3 months. So you're going to be able to pay off that loan faster and then can use that additional 3 months, that $200 payment, and apply it to something else. So it's another reason why it is important when you're thinking about increasing your cash flow to look at refinancing because that is one way. Now, there are different components to consider before you refinance. One of the ones that I recommend is really going to be a big one is that interest rate. Like, what kind of interest rate is it? And as we're thinking about refinancing, right now, if you have a car loan, anything above 3%, 2.5%, I would look to possibly refinancing. The rates are fairly low right now. So if you do have a car loan, anything over 3, I would encourage you to think about refinancing. And it's a fairly simple process. You can go onto websites. Sarah, if you're able to maybe drop the rates that we have on our website, just so you can use it for comparison. Most lenders will have the rates out there. Some won't, but at least if you look around, it could give you a good starting point. As a not-for-profit, we're very transparent, so you'll be able to see our rates on our website. In addition to the auto loan, if you have credit card debt and you have anything that's in the double digits and you are carrying a balance month to month, I would look into possibly contacting your credit card company first, especially as healthcare workers. They may be able to offer you a reduced interest rate based off of where you work and also based off of what the current situation. A lot of credit card companies are offering lower rates during a certain time period. If not, you may want to look into doing a credit card balance transfer because that could help you reduce how much you're paying. That will typically give you about 0% interest rate for about 12 months or 18 months, and that will then make it so that your payments are going towards mostly principal versus mostly interest. There are some hesitations with the balance rate transfer with the credit card that we recommend having a plan. So if you are, let's say you have, and I'm going to use very simple numbers for the example, but let's say I have a $12,000 balance and I do a balance transfer, then I would try to budget paying $1,000 each month so that you have a plan in place to have that credit card paid off before that introductory rate expires. Because if not, then you're going to be charged additional interest later. And a lot of times folks will not have a plan going into it and they'll actually end up owing more money in the long run because they add on additional debt. For mortgages, if you have anything over a 3.5%, whether that's for your first mortgage or a HELOC, which is your second line, I would look to possibly refinancing. And then for student loans, right now the rates with the federal student loans are at 0%. You're not going to get a better rate than that. So we wouldn't recommend refinancing your federal student loans right now. If you have private student loans, I would keep an eye out on what's going to happen in the next couple of months. I wish I could tell you, you know what, in October, this is what's going to happen. We just don't know. But most likely, if there are changes to the federal student loans, Private lenders may react and also make changes. We just don't know what that will be. So definitely keep an eye out. If you are considering refinancing, know that the benefits you have with loan A will disappear when you go to loan B. It's just as if you were living in an apartment which had a wonderful dishwasher, and you go to an apartment that you move out, go to an apartment that doesn't have a dishwasher. You can't go back to your old apartment and use that dishwasher. You've lost that benefit. Very similar when you refinance. When you go from one lender to another, the benefits that you originally had, you no longer have. This is why we say hold off on thinking about refinancing federal student loans, because that 0% interest rate that you have with the federal government, once you take your loans out, you won't have those benefits and all these possible changes that are in the works, in talks. We don't know what's going to happen with federal student loans. If you were to refinance to a private lender, you wouldn't be able to take advantage of any of those benefits. With refinancing, another key piece is your credit score. And we often will talk about credit score, and people may not think, well, how does that impact increasing my cash flow? Having a higher credit score can mean that you can get a lower interest rate. And that lower interest rate means that you're going to have a lower monthly payment, which therefore can help you increase your cash flow. So it's really a big piece of refinancing is knowing your credit score. You can actually pull your own credit score for free. It does not impact your credit at annualcreditreport.com. And this is something that used to be annual, hence the name. But because of COVID, they have extended it so that you can actually pull your credit report once a week from each of the three bureaus, which are Experian, Equifax, and TransUnion, now through April of next year. Most of us don't need to pull our credit report on a weekly basis, but it is a great option, especially if you have done something like a skip a payment, which Sarah spoke about earlier, and you just want to confirm that it had no impact on your credit report, you can do this. And because you're pulling your credit report for educational purposes, that will not have an impact on your credit score. If you are going to think about refinancing, you're going to shop around for different rates, which is a good thing. You want to make sure you get the best rate for you. Try to do that within a 2-week period. That way, if I'm looking for a mortgage and I go to a couple of different companies during that 2-week period, that will count as an inquiry, which it will impact my credit score, but it will have less of an impact than if I pulled my credit report once a week for the next couple of months. So if you are going to shop around, do that within a 2-week period or so. The closer together, the better, because the bureaus will identify that you're shopping around for a rate, and therefore it will have less of a negative impact on your overall credit score. I talked a little bit about all of these before, so I'm not going to spend too much time here. I will just do a quick review about personal loans and debt consolidation loans. If you have multiple debt, let's say you have a credit card, you have medical debt, and thought you thought about doing a credit card balance transfer, but you decided, you know what, let's go back to that $12,000 example. $1,000 a month is a lot. I may need more time. You may want to look into a debt consolidation loan, which essentially what that is, you work with a lender. We offer these at the credit union, and you borrow the amount that you need. So let's say I need 15,000 for the 12,000 I have on my credit card, and maybe I have other debt that equals 3. I can take out a $15,000 loan, and typically the repayment is 5 or 7 years. Every lender will be different, so make sure you look at their specific terms. But the benefit of that is that you'll be able to pay off all of those debts sooner because the lender will pay those off on your behalf, but then you have more time. So instead of trying to accelerate the payment in 1 month, in 1 year, you now have 5 or 7 years. And because the rates are significantly lower, like usually they're about 5%, maybe a little bit lower now with the market being where it is. But because the rate is significantly lower, you're going to actually end up saving money, even though it's extended terms and you have a lower monthly payment typically, and therefore you have that higher cash flow. But remember, if you're ever in a situation that maybe you increase your cash flow so much that you're like, you know what, I actually have extra money, we would recommend trying to pay off debt and make sure you save for emergency funds as well, so that you're not carrying unnecessary debt. We also want to talk a little bit about using your household benefits. So this is another way that you can save money, that you can increase your cash flow. And we have Riley, who's going to join us shortly to give you some specific benefits from your employer here at DFCI. So Riley, I'm not sure if now would be a good time for you. Feel free to unmute yourself.
Hi, Migdalia. Yes, now is great. I'm just wondering, can I share my screen? Can you hear me?
Yes, I will make you a presenter right now. So you're
Okay.
able to share your screen.
Um, sorry. Can everyone see my screen?
We can, yes. Yes.
Um, okay. Does everyone see loan forgiveness and college savings?
Yes.
Okay. Great. Um, sorry, I'm very new with GoToWebinar. I'm so used to Zoom and Teams. It's like all of the platforms out there. I have to get used to them. So my name's Riley Kane. I work on the Wellbeing and Benefits team. I'm going to just go through some of our perks and what we have to offer right now. Um, and then obviously you can email or ask questions after. Our email is askhr@dfci.harvard.edu. Okay. So our first one is we have loan forgiveness and college savings. So this is the sheet right here. So this can be found off our well-being and benefits page under financial well.
Sorry about that, folks. It appears we may have lost Riley. So I will give her a moment to join us again. What we're going to do as well is we're going to get all of the links from Riley so that you'll be able to have them and you'll be able to then get the information directly. I also did drop in the chat where you can get the information about if you have any questions. The link is also in the chat as well. Sarah, I'm going to continue, but if you do see Riley, if Riley is able to join us, please let me know and I will definitely allow her to share her screen so that others can see. So when it comes to the different perks, so as Riley started telling us about different perks, DFCI offers you benefits so that you are actually able to save some funds. Oh, and I found Riley was able to get back on. So let me make her the presenter so that she can share again.
Can everyone hear me?
Yes, Riley, you're back and we can see your screen.
Okay, great. Sorry about that. All of a sudden I'm like, I think I'm the only one here. Okay. So I was going to talk about how we have, as a nonprofit organization, you are eligible for public service loan forgiveness forms, meaning because we are nonprofit, you are eligible after 10 years. Your debt essentially gets wiped out from school. It does depend on the types of loans you have. I would look it up on your own time and do your research to confirm that you are in the right loans in order to be eligible for public service loan forgiveness. There was a statistic that 97% of applicants utilizing the federal public service loan forgiveness program were denied. So do your own due diligence and make sure you're in the right repayment plan. Going off of that, we do offer off of our loan forgiveness and college savings page under financial well-being. We have this great program called Savvy, and what Savvy does is they essentially help you make sure you're in the right forgiveness program repayment plan. So they're going to help you lower your monthly costs, and they're also going to help you understand what you have out there for choices and how to make your repayments. So definitely check out Savvy. We've partnered with TIAA as a part of this and putting on Savvy. So you can find all the information about Savvy again off of our financial well-being and then college savings plans. and they're always available to help you out. I've heard great things about it, and it's something we're really excited to be offering. And then I was going to give a quick tax update. I'm sure everyone knows that taxes are now due May 17th. And going off of that, Dana-Farber at this time is allowing you to make mid-year FSA and HSA changes. So you can increase or decrease the amount you've put into your FSA or HSA right now through September. We're allowing this. You don't need to wait for open enrollment. So if you're finding your child is actually going to be going back to daycare and you want to put more money inside of your dependent care FSA, you can do that. You're going to go to our COVID-19 Wellbeing Resource page off of our homepage, Wellbeing and Benefits, and then it's just going to say COVID-19 Resources. And then right here are the two forms. You're just going to fill it out and send it back to us. I just talked about how people could increase or decrease their FSA and HSA annual elections right now, so feel free to do that. The other thing I wanted to talk about is our school enhancement programs with Bright Horizons. So it's discounted nanny placement services, preferred enrollment at Bright Horizon centers, tuition discounts at participating network centers nationwide, and they have a ton of other really great resources for you. It's such a great service. We also do offer a free membership to care.com with additional info on like distance learning. I would just suggest going over this whole page and looking at all of our child care, family care, elder care, dog walking services on here. Again, this is found off Whole Wellbeing, and then it's for child care. And then the other thing I wanted to talk about was KGA, our Employee Assistance Program. KGA, as an employee, you get a free membership with them. They offer so many great resources, from legal to nutrition to work and stress and sleep coaches. Definitely something you'll want to access as a DFCI employee. This is the grid that goes into more detail about what they have to offer for services. They're a great platform for you to use as an employee here. And then lastly, I just wanted to talk about our employee perks page. We're still making edits on this and updating it daily, so definitely check it out. Tickets at Work and BJ's Wholesale Club are two really huge perks that everyone likes to use. We have our Harvard Credit Union information on here. And as you can see, there's engaging minds. So definitely take a look at this page. Like I said, we're still in the process of updating it and revamping it. So definitely check back on this. And please feel free to ask any questions or to email us at AskHR. And then just this was the last page, Magdalia, I was going to show, but this is our personalized Dana-Farber page for.
Thank you, Riley. So yes, this is our page that you can learn a little bit more about all of the different sessions that we host. And all of the sessions that we've hosted, if you are unable to, haven't been able to attend them, we do make them available through a recording. So you'll be able to have the recording and can always go back in the future. So the same page that you registered for today's session, that will also be where you can go and look for additional sessions. I'm also dropping it in the chat for you so that you can, at your convenience, look for additional presentations. Thank you, Riley, for all of those helpful links and information. If folks have any questions, please submit them via the chat, and we will ask Riley, who is still on the webinar, so that she can help clarify anything. If you could also email, and we did include that email, and we will also include the links that Riley shared with us in the follow-up email so that you have access to that in the future. And if you do have any questions, you can email at askhr@dfci.harvard.edu. I believe the email that I put in before was incorrect, so I'm just making that quick edit, but it's askhr@dfci.harvard.edu if you have any additional questions for Riley or the HR office. So in addition to all of the benefits that you have through your employer, keep in mind that there are also household benefits. So perhaps if you live with a partner, children, adults, maybe you're living with your parents, they might also have benefits that could be of benefit to you as well. So you want to just find out, think not just your benefits, but your household benefits, because these can all help you increase your cash flow. Also, financial institutions. Uh, a lot of financial institutions, including us at the credit union, will have a couple of different benefits for folks. That could either mean, I know for us at the credit union, like we do free notary services. Additionally, we have, if you go through I believe it's I Love Credit Union's website, you can also get additional discount through that. So check with your financial institutions to see what benefits they might offer. Right now during tax season, there are a lot of different credit card companies and also financial institutions that are offering benefits, and employers as well, if you go with a specific tax preparing software. Health insurance, I'm sure most of you are very familiar with this, but there are perks based off of your health insurance provider. Sometimes they'll reimburse you for gym membership, or now during COVID times, you may be able to get reimbursed for equipment that you would buy, or exercise equipment. Credit card companies are a really, really big one. They will usually offer you perks or discounts if you are going to do shopping with either their credit cards, or they may have a special website that if you make purchases through that website, it will be at a discount. Keep in mind what Sarah told us earlier. We want to make sure that you're not taking on making additional purchases. So always look for the discounts and the perks for something that you are already considering buying, versus being tempted by seeing all of the discounts and say, oh, that's a great discount. I can save 20%. Yes, you're saving 20%, but now you're paying something that you weren't going to pay for before. So you really end up spending versus saving. Your phone carriers, your schools where you went to college, usually will also have discounts, and cities or states as well. No, we talked a lot about reducing and deferring, and it would just be, we would be doing a disservice if we didn't talk about increasing your income as well. That is one of the ways to increase your cash flow. And this is where we know everyone's situation is different. And for some folks, it may mean that temporarily you're taking on additional hours, or maybe taking on an additional job, or maybe it means speaking with your employer to see if there are opportunities for promotion or raise, or looking for different positions maybe within your current employer. But this is just something to consider, that at some point for most of us in our careers, and as we're managing our finances, there is a reality that we may need to look for other ways to increase our income. Maybe it's a supplemental part-time during a certain time period, or taking on additional hours. Everyone's situation will be different. So I'm not going to get into too much detail other than what I have said, but I do want to mention that, because that is one of the biggest ways of increasing your cash flow. It is to increase your income. And we do understand that that is oftentimes easier said than done, but it is still worth noting, because there are ways to do this. We know we talked about a lot of information, so I wanted just to give you some additional resources as we start to round up our presentation today. And if you have any questions, please drop them in the chat. We also have a quick survey for you to complete. So I'm putting that in the chat now. So before you head out, we do ask that you complete this quick survey. I want to first thank you too for your patience. I know we had some technical issues today, but everyone stayed on, so really appreciate that. On our blog, we have information on very timely topics. We put about 3 or 4 blog articles each week. We really believe that it's important for our communities to be aware of what's happening. There are a lot of scams that are happening right now. There's also tax season. We have a lot of students that are graduating. Our students, their last day of classes was not too long ago. So we are really excited to continuously provide you with information. And you do not need to be a member. We would love for you to be a member of the credit union, but you do not need to be a member to access this information. And if you prefer to just get an email with a recap every 2 weeks, you can just subscribe to our blog and have that information emailed to you. I did drop the link in the link to the survey in the chat, so that if you did have any feedback, we highly would recommend that you share that with us. This is one of many presentations, as Riley shared earlier. We do have a series with DFCI, and we continue to update our presentations, and we really do look at your feedback, because we want to make sure that we are respectful of your time and providing you the information that you want to receive when you want to receive it. And just a quick disclaimer, we didn't really get into tax or anything that I think would be specific to anyone's situation, but just a overall that this information is really meant to be educational. Everyone's situation is personal, so we won't be able to provide that one-on-one advice, but you do have KGA, you have Greenpath, you have many different resources that you can contact for free and they can go over your specific situation. I hope this has been helpful. I'm going to check to see if there are any questions, and if folks have any questions or anything else that they would like to share or anything that we can clarify, please let us know. We are here for a couple more minutes to help answer any questions you may have. I do want to remind you that we will send the recording. We will also send the slides, and Riley will also provide us with those links so that we can include those in the email that you will receive. And most likely you'll receive that email probably, if not tomorrow, by Thursday.